Thanks for joining us for the Member xCite presentation. The Member xCite presentation is informative, interesting to the audience, and showcases the strengths of the presenter as an entrepreneur and their area of expertise. It's not a sales pitch, it's a 10-minute educational and insightful exploration into what they do. And of course, it's exciting.
Ladies and gentlemen, please welcome our xCite presenter today, Micallef from Property Investment Store, to present to us on Don't Let Fear Get in the Way of an Investment in Property. Are you looking for reasons to invest or not to invest? It's always a good time to invest in property, but investors need to understand where and what time. Maria will discuss the current environment, what to look for, where fear can cost you, and what investments make sense in today's market. Micallef is a property strategist with the Property Investment Store. She is also a property investor herself, and it's this experience she offers her clients looking to create wealth through property. She has helped people of all ages start and develop property portfolios that have achieved incredible results, whether it be an investment in NDIS, co-living, duplexes, dual keys, townhouses, or regular homes. Ladies and gentlemen, please put your hands together for Micallef.
But Robert Kiyosaki said the primary difference between a rich person and a poor person is how they manage fear. Now, I also believe it's how they view their money. Okay, the rich view money as an opportunity, where the poor view it as something to be earned. And it's this mindset that can really make a big difference to your financial future. And when it comes to fear-mongering, the media, social media, bloggers, they love doing it because it's all clickbait. And when you write negative stuff, people are keen to see what it's all about. They don't want good news, they want to know the worst of things, right? So every time you see the media going on about different stuff, it's just a way to rope you in, and it creates a real problem out there because negative stuff sells, but ultimately impacts our mindset. They've been talking about the affordability of housing and how it's gone down, construction costs, builders going bust, the Ukraine war. You've had issues with, they're talking about the upcoming election. Have you voted yet? Tomorrow? Rising inflation, rising interest rates, and all this has created so much fear. And on top of that, they even went on and on about the weather. So it really frightened people away from investing in property. And all it's done is it's put on hold something they really need to be looking at. So what's the antidote to fear? Correct information, not clickbait, and getting it from credible industry sources. So for me, when I talk to people, when it comes to investing, it is all about the numbers and making sense of them. It's got nothing to do with emotion, it's just about the facts. I'm going to address one of the fears that's out there right now, but probably the biggest one. It's to do with interest rates. I don't know if you're aware of this, but the last 2 times interest rates were raised, are you aware that the property market also went up? So in between 2002 to 2008, it went up, the cash rate went up 3%, property went up 30%, right? Then in 2009, the next period, it went up a further 11%, where there was a cash rate increase. Now, what do we take from that? Well, the funny thing is, the first one that I mentioned, went up 3%, we're in a similar environment now, where that is going to rhyme. I never say history repeats, it rhymes. We are going to be seeing the same sort of thing happening again, because we have that same environment in terms of wealth with individuals, people being paid more, we've got low unemployment. So everything is here for the same thing to occur again. Now, when it comes to your ideas, you can always get confirmation bias, right? You can always seek out what it is that you want to buy to support your view. But I'm going to tell you, when it comes to interest rates, there is actually a limit, a mathematical limit, to how high they can go. Why? Because we're all in debt, and the Australian economy, we're highly indebted to it, and there's a lot of debt to pay back. So if we go too far, it's only going to create a crash for everyone. Now, John Adams is a professional economist. I came across something on YouTube that I'm happy to share with you. He actually predicted what we at Property Investment Store knew was going to happen. In 2020, when we went into lockdown, we said property prices were going to go up. We knew it was going to happen. Because with every negative moment, the ones who invest then, they're the ones that do really, really well. Once we get past that hurdle, which we did, everyone started to come back into the market. And then we had consumer confidence in 2021, which stupid levels, which is why we saw property increasing at ridiculous levels. Okay, now this guy predicted that. He's predicting something which amazed me is going to be happening in the very near future. So he's talking about in 2024, we're going to have an environment similar to 2020. I'll come back to that. So why interest rates can't be the cause of collapse for everyone and why it's not something to be fearful. The banks recorded a 58% lending figure for property, right? 58% of their funds goes to property. I think it's in their interest, isn't it, to ensure it doesn't go beyond their reach, because if it goes too far, they're going to crash. And that would seriously be a problem for more than just the banks and those who have interest in finance. The power elite, right? I don't know if you're aware of it. We talk about it. Some people think it's a load of malarkey. Well, it's like, well, who's behind the banks and who's controlling the strings out there? We know we have a power elite. Now, they also don't want to see interest rates go beyond people's reach because it's going to impact their wealth and their power. We've already talked about how banks can crash if interest rates cause everyone to crash. We also know that politicians will get voted out. Governments are interested in seeing property continue to do well. Why? Because there's a lot of money to be made in it as well. And there are a lot of interested parties who want to ensure that as interest rate goes up, it doesn't go too far, because if you stretch the elastic too far, it will break. So potentially, but I love that John Adams, he's ready for this one. He's predicted that in 2024, mortgage rates will go to 1%, half of what they are currently, and that the property market will actually increase in value. You might not believe it. I'm going to give you the link and you can have a good listen to it. So that's what he's saying. But before we get to that, what we're going to see is interest rates are going to increase just slightly. We're only talking about little increases. We are not going to get the levels of what we saw in the 80s and 90s, where it hit 17%. That would really destroy our economy. Just remember that. We are going to see something that might peak at that 5% level, but it might not even get that far. Now, we were enduring those interest rates just a few years ago, so there's no need to panic and buy into the fear-mongering of the media. Look at the facts. That's what it'll go to. It'll be incremental. But when it does go to that point, guess what? The RBA, they're going to reassess and make sure that it's not going to break everybody. Because if it does, it's going to have ramifications for the whole country. So they're going to monitor it. He believes what's going to happen, and I agree with this, is going to come back down to more reasonable levels. So it's going to go like this, and it's going to come back down, because guess what? All of this is a cycle, and the cycle will repeat. But you know what? It's not just about interest rates alone. So when you're looking at property, you've got to look at other factors. We've got a strong economy, historically low unemployment. You've got rising wages to counter it. We've got excess savings of $250 billion, thanks to a report that we found. That's because of the savings people made during COVID. So there are buffers for a lot of people. Yes, not for everyone, but for those who don't have the buffers, that's where there's going to be a reassessment as we go. But here are the two most important things I want to focus on why property is really important. Who cares about interest rates? Focus on property alone. We are in a rental crisis. Are you aware of that? We have a serious shortage of homes. The construction industry, for all the reasons you have heard about, are not building homes fast enough to cover the demand. We've got vacancy rates at record low levels. They're under 2% around the whole country and under 1% in most locations. What does that mean? Demand is far outstripping supply, and the investor as a result can command, not the investor, sorry, the landlord can command super high rents. An example, one client has a property they're leasing up for $495 a week. He is now going to put it up to $675 a week. Right, those gains are not, that's not just a fluke. There's a lot of these stories. One property that was $490 a week estimated at the start of last year is now worth $620 by the end of the year, $650 or more per week. And so the people that are buying these properties where everyone's saying don't do it, they're raking in the income and they're getting that positive cash flow to combat any concerns anyway with interest rates. So as I said, this is all really cyclical. We go up and down. We have a cycle with our property market. You can see and learn, and I'll talk about that in another presentation that I'm doing in June if you want to know more about credible sources and some information to help you make decisions in property. But I'm going to leave you with one example of someone who sat on the fence and waited versus someone who went for it. So at the end of 2020, he was presented with a 4-bedroom house in Pimpama. It's only going to cost him $517,000. We will not get that now. Okay. Another person bought a similar property, 4-bedroom house in the same estate in January, okay, for $513,000. They went ahead with it, and that person made equity growth. Their property's now worth at least $680. I reckon they could sell it for $700. They took the equity out of that property after just a year, bought a second property, and they've used it to also buy a third property. It's about time. Sit on the fence, you've lost your most valuable asset, time. Okay? So don't feel the fear. If you feel the fear, do it anyway. As for me, I'm a property strategist. I help people combat that fear where possible and redirect them where they need a little more. But it's just about educating and informing. That's something we do when we deal with our clients and listen to what it is they want to achieve, give them the benefit of our experience and get these amazing results for our clients. Thanks very much, everyone. If you want the link, just let me know and I'll send it to you.
Thanks, Maria. Does anybody have any questions? Maria?
Maria, investing. Everyone wants to see that home they buy. So how do you sell against that? You know, where you live in your area, you want to drive past your property, where is that not necessarily the best investment? I find that amazing when you look at the numbers. How do you get across that?
Yeah, that's a really good question. There are some people who simply won't get past it, and if they live in the area, it's all well and good. But we're reminding them this is a business decision, not an emotional decision. You don't need to see it to believe it. You just need to look at the numbers and the cases, and we've got information to guide them as to why they can expect it to do well. And we also have information where they're worried about floods. We can reassure them that you can't build in flood-prone areas now. A lot of work has gone into ensure that your property is going to be safe. And we've got a team of experts to connect them with so that they know their property is going to be looked after. So ultimately we're saying to them, this is about a business decision. The whole purpose of investing in property is not to be there. It is a way to make money when you're not there. So we try to focus on those sorts of things and just inform and educate them about ways where they can at least feel at ease that their property will be looked after, and even with the inspections, how that process works so they can feel like it's safe.